Hello, and welcome back to the Simulated Trader. My name is Anthony. All right, so today we are talking about Ocean 2 gold, what we're calling the fear barometer. Just a quick recap. Ocean 1 was bonds, right? Which is the cost of money or the benchmark for just basically parking your money. Park your money and get paid for it. Looking at the 10-year treasury is basically the what we're using as the benchmark. So like right now, you're looking at about 4.13% as your return. So what also keeping in mind, right, this is exactly what you're doing, comparing. That's why we call it the benchmark, right? You're comparing what it's basically going to give free money for all intents and purposes, compared to other asset classes out there, right? Are you going to put your money here in the bonds, because this is the safest return on investment, or are there other asset classes out there that's going to provide a better yield? Okay, so that's the benchmark. Now, today we're looking at gold, and gold is the fear barometer, meaning how much do you actually trust the system, right? So gold doesn't provide a yield. It doesn't have really any kind of compounding effect, right? You're not going to invest in gold and then come back a year later and say, oh, look how much this is compounded. It really isn't going to do anything like that. So why on earth would you move capital out of almost guaranteed free money into an asset that's really not going to pay you anything at all? But there's a couple things that go on in global economy that make gold a safer asset than bonds or any other kind of risk asset class out there. So let's take a quick look at that. So right now, the biggest reason people will move capital out of bonds or from any other kind of risky asset is inflation, especially when there's big moves, right? So, right now you can get paid 4.13% in your bonds, but let's say inflation comes up to 5.13%, right? Now you're paying to park your money, and nobody's looking to rent space with their capital, right? So that's why you would move capital from bonds into gold, and instead of paying rent, you're just stopping the bleeding. You're not making any money, but you're not paying any money. That's usually the number one reason why people will move money from bonds into gold. Now, let me mention this for a second, because you and I, as individual retail traders, this isn't really something that you and I would do. But also keep in mind, we're talking about institutional money, millions, billions, trillions of dollars, right? So this 4.13% right now may not be nothing to you and I, but on those larger scales, it's absolutely something specific, something real. And again, at the end of the day, this is all about someone's trying to make a buck. Okay, so if you stick with me through these asset oceans that we're looking at, you'll see how this all trickles down to the underlyings that you and I trade. But this is why this is level 2 in the 4 levels of context. If you recall, ecosystem, environment, climate, weather. This is why we're looking at this environmental layer right here. And if you understand these 4 oceans that we're talking about, you'll understand how it affects your underlying down below. Anyway, back to gold. Is other reasons people will move their money to gold is geopolitical, and right now that might ring a bell, with what's going on in Iran right now. So think of that. Think of what's going on over there. If you're in a situation where somebody can come in and freeze your assets, or hit a keystroke on a computer and poof, it's all gone, where are you going to rotate your capital to, right? Something physical. And gold is that, because nobody can they can share. It's going to take a bunch, but people certainly could take it away from you. But it's, if you've got it in your hands, you physically own it, right? And now no one can just simply delete it from your account, so to speak. So that's one of the biggest reasons that we look at gold as a fear barometer. It's really, do I trust the system? And we're talking global economy? Do we trust the system enough that if we're going to park our money in bonds, that I trust that the government's going to pay me back, or any other kind of asset? If if I'm going to buy 100,000 shares of Apple, do I trust that Apple's going to be able to pay me back my investment? If we start to lose that confidence in any kind of these sectors, people rotate their capital into gold, and therefore you will see gold increase. And that's spike, over a short period of time, right? Duration is going to be the key on what this is really showing. So now we've got ocean one, which is the benchmark. Okay, basically, how much am I going to get paid free for just parking my money? Okay, now we're looking at gold as the fear barometer. How much do I actually trust the system? Okay, so as long as gold is doing its normal thing, then everything is, the status quo is being met. But as we keep an eye on that, again, it's giving us an indication of what's going on a global scale. And that will eventually give us the ultimate macro read on a daily basis, that we can keep an eye on as the narrative continues day by day by day by day. As long as we're paying attention, we understand what's going on with the story. We're not blindsided when it actually comes down and affects the underlying that we actually trade. So stick with me until next time. We're going to look at Ocean 3 currencies, specifically the euro versus the dollar, and what that means, so that when we look at these particular three oceans out of the four, bonds, gold, currencies, and oil, we'll have our full picture so that we understand the environment as a whole. So I hope to see you next time for Ocean 3.